Subscribe to my channel Report Stock.
Welcome to the Deep Dive, where we go beyond the headlines, really digging into corporate stories. Today, we're looking at more than just an earnings report. We're sort of uncovering this fascinating story of resilience, maybe even strategic genius, inside a huge industrial giant.
Exactly. And the real puzzle we're trying to piece together for you is, well, how does a major company pull off record results when, the global economy is pretty much universally described as challenging, maybe even worse than challenging? The real story, like always, is buried in the details.
It really is. So today's deep dive focuses on Lendo PLC, that's ticker LIN, and their Q2 2025 earnings call. And the paradox is stark, isn't it? Record earnings, but they're also talking about, quote, economic headwinds. We want to figure out exactly how they manage that, and maybe more importantly, what lessons you can take away from their playbook, whether you're running a business or just trying to understand what's going on out there. Okay, so let's jump right into those Q2 numbers, because honestly, they're pretty incredible. We're talking a record quarterly EPS, that's earnings per share, of $4.09. That's up a solid 6% from last year. And get this, an all-time high operating margin. 30.1%. That's up 80 basis points year over year. Fantastic numbers. So the big question is just how? How do you hit records like these when things are supposedly so tough economically? What's the secret sauce?
Well, what's really fascinating here isn't just, the headline numbers themselves, but what they tell us about the underlying strength, the operational strength, the capital efficiency.
Right.
It seems almost disconnected from the broader market mood. Consider this. Their operating cash flows, up 15% year over year. 15%. And their return on capital ROC is at 25.1%. That's leading the industry. For any business listening, these aren't just stats. They show a company really generating its own momentum, building a buffer.
Yeah, that's a powerful position to be in. Now, what about sales? They hit $8.5 billion. That's up 3% from the prior year and 5% from the last quarter. But it's a bit more complicated under the surface, right?
It is. If you strip out acquisitions and currency effects, the underlying sales growth was actually 1% year over year and 3% sequentially.
Okay, so 1% underlying year over year. And here's the kicker. Volume change was actually down 1% from last year. It was up 2% sequentially, though. So sales are up, but volume's a bit softer year over year. What's actually powering the growth then? If it's not just more stuff being sold, what's driving it?
Right, and this is where their strategy, their discipline really shines through. First, acquisitions helped. They added 1% to sales compared to last year. Smart, targeted growth. But maybe even more crucial is that project backlog, their sale of gas project backlog. It's actually doubled over the last 4 years. It's now sitting at a massive $7.1 billion, and they're executing on it, turning it over. They've put $6.5 billion to work just this year, focusing, really strictly on investments that meet tough risk-reward hurdles. This kind of foresight isn't just about today's numbers. It's building this strong pipeline for future revenue, stability for years.
Okay, that makes sense. Building for the future. But then there's this other angle to Lin's strategy that I have to say kind of surprised me. Their role in the space sector.
Ah, yes, the space angle.
It's pretty remarkable, isn't it? An industrial gas company being so critical to, well, rocket launches.
Yeah.
They've got strong customer commitments, driving double-digit growth in commercial space launches. Linde supplies gas for more than 4 out of 5 launches in the U.S. 4 out of 5. Their revenue from commercial space has quadrupled in just 3 years. And they've invested heavily in infrastructure to back that up. It almost feels like they spotted this niche that maybe others missed.
Oh, I think it's more than just a niche. It really points to incredible strategic vision, and it raises a key question for any leader listening. How do you spot and jump on these high-growth, maybe specialized opportunities? Especially when your traditional markets might be, struggling a bit. It really speaks to a deep understanding of where industry is going and having the agility to invest there, finding those hidden currents, like you said.
So, okay, we've got these amazing records, this surprising space growth. But it can't all be smooth sailing, right? No company operates in a bubble. What are the storm clouds Linde is keeping an eye on? What does that tell us about the wider economy?
Absolutely. That's a crucial piece of the puzzle. That 1% volume dip year over year, that was mostly driven by weaker base volumes in EMEA.
Europe, Middle East, Africa.
Yeah.
Yeah.
And Europe, particularly Western Europe, is expected to see demand continue to soften. There's just no obvious catalyst for an economic upswing there this year. They're even talking about things like deindustrialization, potential plant closures. That could hit long-term growth. So the European situation is definitely a significant headwind. It shows how these localized pressures can affect even a big, diversified global player like Linde. It's a real reminder of how macro issues hit the ground.
And you mentioned another specific challenge, something about the electronics market and helium.
Yes, exactly. Helium pricing is down high single digits, mainly because of oversupply, especially hitting them in Asia.
Oversupply driving prices down. Okay.
Yeah. It just highlights, the fragility we sometimes see in global supply chains and how a regional glut, even for an essential gas like helium, can have a real impact. It reinforces why Linde overall remains pretty cautious in their outlook. Their guidance reflects that caution, potential economic contraction, currency swings. They're factoring it all in.
Right. So you've got these incredible strengths on one side, the backlog, space, pricing power, and then these very real headwinds on the other. Mixed signals for sure.
Yeah.
How are the leaders, CEO Sanjeev Lamba and CFO Matthew White, planning to navigate this for the rest of the year? We got some clues from the earnings call Q&A.
We did. Sanjeev Lamba gave this very granular view, almost like looking at a map with different weather patterns in each region. He expects America's volumes to be flat, maybe slightly up. That's helped our resilient areas like, well, those space launches we talked about.
Okay, America's holding steady.
Europe, though, as we discussed, likely continued softening, especially Western Europe. Asia's a mixed bag. China expected to be flat EVs and electronics, kind of balancing out weaker metals and chemicals. But India looks strong, showing good growth potential. Overall, Asia-Pacific, probably flat.
Flat for APAC overall.
Yeah, so it's a really nuanced picture, isn't it? Different regions, different realities. They need very tailored approaches.
Definitely not a one-size-fits-all situation. And what about pricing? That's always the huge question in a tough economy, right? Can they actually push through price increases?
Yeah.
Because that's critical for profit margins with costs going up.
Lamba sounded pretty confident on that front. He pointed to their history, saying Lind has consistently managed positive pricing for the last 25 years.
25 years, even through downturns.
Even through various economic cycles, yes. He expects that to continue, with pricing generally tracking the globally weighted CPI, the Consumer Price Index, though he did flag specific challenges, like in China, especially with that helium situation we mentioned.
Right, the helium oversupply.
But overall, this ability to consistently get price increases, cycle after cycle, it's a real sign of a strong market position. And it's absolutely vital for staying profitable when costs are high. A powerful lesson there in market power.
Definitely. And the CFO, Matthew White, he added something about margins in the Americas.
Yeah, he noted that while America's margins were flat compared to last year, there's room to improve. He put the flatness down partly to some mix effects, mentioning home care specifically. But his main point was about looking at the full year, not just one quarter's fluctuations.
Taking the longer view. Makes sense.
Exactly. And reinforcing that long-term perspective, Lamba sounded really confident about the project backlog. He said it would end the year with a 7 handle.
Meaning over $7 billion?
Comfortably over $7 billion, yes. And that's even with starting up $1 billion worth of new investments in the second half. He stressed they have a really strong pipeline of opportunities, expecting to sign enough new projects to keep that backlog robust. And that backlog strength, it's such a crucial indicator for their future stability and growth. It gives you that longer view way beyond just quarterly blips.
Okay, so let's try and wrap up this deep dive into Lindo PLC. It really is quite a remarkable story, isn't it? Achieving record financial results by playing to their strengths, that huge project backlog, the surprising fast-growing space business, and just consistent pricing power. And doing it all while navigating some pretty serious economic headwinds in key places like Europe and specific markets like helium.
Absolutely. I think ultimately this deep dive really shows that even when the global economy feels challenging, companies that have that strategic foresight, that disciplined approach to capital, and crucially diversified high-growth opportunities, they can do more than just survive. They can actually thrive. It boils down to finding those specific pockets of demand, maybe the ones others aren't seeing, and just executing incredibly well on the operational side.
So maybe a final thought for you to take away. As you look at the companies and industries around you, think about what hidden strengths or maybe surprising growth areas might be pushing them forward. Even when the general economic story seems a bit grim, what's really protecting them and propelling them, defying the broader narrative? Something to keep thinking about.
Subscribe to my channel Report Stock.